Enjoy your meeting. Just a reminder, today's meeting is being recorded.
Hello, everyone. I wanted to thank you all for joining us on this webinar this Friday. Today, we are joined by two partners from Gowling WLG. It's a new international law firm created by the combination of Gowling's, a leading Canadian law firm, and Ragg Lawrence Graham & Co., WLG, a leading UK-based international law firm. And today we're going to be speaking a little bit about doing business in between the UK and Canada, and I'll just go ahead and introduce our speakers for today. Our first speaker today is Jonathan Chamberlain. He's a partner and a regular visitor to Atlanta, a keen advocate for the Georgia tech scene. He has helped many U.S. companies to set up and operate in the UK, ranging from niche software houses to working for major auto manufacturers and national, now international, coffee chains. His own discipline is employment and labor law, so he has a particular niche in helping U.S. companies navigate some of the cultural as well as commercial and legal issues in operating overseas. And our other partner today that's joining us is Naeem Antaki. He's a partner in Gowling WLG and the leader of the technology group in Montreal. With a wide range of clients ranging from startups to Magic Quadrant companies, he seeks out solution-oriented approaches in the course of their cross-border activities and expansion, requiring the ability to bridge civil law and common law jurisdiction in multilingual environments. He works regularly with U.S. companies on business acquisitions, financing, strategic commercial agreements, and technology-specific procurements. Naeem is also the president of the Princeton Alumni Association in the province of Quebec. I'll hand over the rest of the presentation to our presenters today. I just wanted to remind everyone, if you can please mute your phones to pay respect to the presenters today and make sure that the webinar is the best quality that it can be. If you have any questions, please hold them until the end. We're going to have about 10 to 15 minutes for questions. Yeah, I hope you guys enjoy. I'm going to hand it over to Jonathan.
Thanks, Hubert, and good morning. I'm delighted to be presenting to you this morning, or as it is for me, this afternoon. This seminar follows on, or webinar follows on from a seminar which TAG put on with the UK Trade and Investment mission to Atlanta, and also the Quebec Trade mission to Atlanta, talking about how Georgia tech companies can make money in our respective territories. And what Naeem and I are going to do today is to talk about some of the basic practicalities, the formalities, if you like, that you need to go through if you're going to be doing business in our very different but equally great places to trade. So, we're going to start off first with the UK, and then we're going to move over to Quebec. Each of us is going to speak for about 20 minutes, and as Hubert said, if you do have questions, please save them up, please type them in, and we'll be able to come back to them at the end. So, starting off with the UK. This is our agenda. I'm going to give you a very brief geography lesson. We're then going to talk about what the basic business structures look like. Then how we actually do business, selling stuff and paying taxes, the formalities around that. What sort of filings do we have to do? How much, as the agenda says, does government get in the way? And then finally, hiring and firing people, bringing people into the country, making local hires, and letting them go again. So, on to the first topic. Small island, many countries. Now, you wouldn't believe it, really, would you? In what is an island, the total area of which is less than the state of Georgia, we can manage to fit 6 different legal jurisdictions and 4 different countries, which is extraordinary. Scotland, it's up here, has an entirely different legal system from England and Wales, although there is some overlap in statutes. The common law is completely different. England and Wales, although two countries, counts as one legal jurisdiction, and it's English and Welsh law we're going to be talking about today. But Northern Ireland has a separate legal jurisdiction, and not actually visible on the map, but round about here, and then round about here, we have our very own offshore tax havens, the Isle of Man in the Irish Sea, and the Channel Islands, Jersey and Guernsey, in the English Channel down here. However, the bit that you're concerned about is London, which is around there, which is where most, although not all, to be fair, US businesses land. And that is in England and Wales, and it's English law that we're going to be talking about today. That is where the vast majority of US businesses land in the UK. So, that's the end of our geography lesson. Now let's look at the next topic. What legal entity should you use if you're going to be doing business in the UK? The first point to note is that the landscape and the terminology looks very similar. We have private companies, public companies, LLPs, general partnerships, and although they are slightly differently constituted as they would be in the US or in the state of Georgia, conceptually they're very similar. Private companies, limited trading of the stock; public companies, much more general trading, but highly regulated, lots of disclosure, although interestingly enough, much less than you would find with NASDAQ or NYSE listed companies. LLPs tend to be the professional service firms, the lawyers, the accountants, etc. General partnerships, generally speaking, mom and pop operations, most unlikely to be a suitable vehicle for you. But the general concepts are very, very similar. Now, which vehicles do incoming businesses actually use? Well, there are really four to choose from in practice, and on the next slide we're going to look at the two most common, the subsidiary and the branch. The subsidiary will be a UK limited company, a private company. And the advantages of using that are ownership, in the sense that if you have 100% owned subsidiary, you are completely in control. There is, of course, a liability fire-break between that subsidiary and the parent company in the US. You are, of course, going to make a great deal of money and be really successful trading in the UK, but in the very unlikely event that it doesn't quite work out and the UK subsidiary becomes insolvent, then that's not going to come back and bite you in the US, at least not directly. There is a liability fire-break there. And the other great advantage of the subsidiary is the familiarity to local business partners. The UK limited company, they know exactly what it is that they're dealing with. There are, of course, disadvantages. Establishment costs. As you'll know, same in the US, when you set up a company, you have to do stuff. We'll look at what the filings are in a moment. But you won't be surprised to learn that there are some. You have to register the directors, the company constitution, etc., etc. And management is, of course, one stage removed. If you've got a local company, you're going to need some local management, and that may lead to issues across the pond. And inevitably, when you have another subsidiary to operate, there'll be bureaucracy at your end in terms of consolidating accounts, and there'll be bureaucracy at the English end in terms of company filings. Nothing much different from what you would expect if you were to establish an affiliate in another US state, but you've still got that stuff to deal with. Which is why you might choose to use a branch. Now, a branch is not a separate legal entity as far as English law is concerned. It is literally just another place, another registered office, if you like, somewhere to do business, which means it's very, very easy to set up. You do have to register with the with Companies House, we call it the UK Companies, or the English Companies Registry. But it's a fairly straightforward procedure. And as a branch, it's just you. There are no other layers of management that you have to penetrate through in order to control it. However, the obvious disadvantage is there is no liability fire-break. If the branch doesn't work out, then aggrieved creditors can sue you and try and have those judgments enforced directly against you in Georgia. Also, a branch, because it's trading under the name of the US company, can be a bit opaque to the locals. What is Inc? What does that mean in the UK? We don't use that terminology. We say limited. So they might not necessarily understand it. And you don't get out of all the bureaucracy. You still have to do some filings, which we'll see in a moment. And finally, any decisions, of course, in relation to the branch have to be taken by the people in authority, which means ultimately the people who take decisions in relation to the company. Management can be conducted from several thousand miles away. If, though, you want to go down different sorts of routes, they are available to you. The next two that we're going to look at are not used nearly so commonly, but I want to mention them because they do suit some businesses. Joint ventures. Now here, there's no legal definition of a joint venture in the UK. The arrangement can be pretty much what you want it to be. That is to say, you can set up a company in which you and your local partner have 50% of the stock or whatever it is you want to do. You can have a shareholders agreement between you which discusses how you run the company. You could run this as a partnership, as an LLP, we mentioned a moment ago, a general partnership, or you can just have a contract between you as to how you're going to do business. And if you have a local partner, you of course have local knowledge and you have local credibility. So it's not surprising that some investors in the UK prefer to go down that route. It means that they can get to market much more credibly, much more quickly. However, the joint venture, by definition, isn't yours and yours alone. You are ceding control of your enterprise. You've also got all those upfront costs in terms of negotiating it, and then you can end up with management by negotiation. The point, though, to take away from here is you have the flexibility to have those arrangements if you want to. You can come up with something which suits you. Similarly, if we look at the model of an agent or a distributor or a franchisee, concepts which, of course, you already have in the US and very similar in the UK. How it works will depend on what your agreement is. It's really easy to set up. You can set up an agency or a distributorship with a phone call and a handshake, or on a single piece of paper. I don't advise you to do it like that, but you can. However, the main disadvantages are you really have very little control here once you sign that piece of paper or you've done that handshake. And there are a set of minimum protections for commercial agents, which means that when it comes to terminate the relationship, there can be some relatively high costs. As we'll see in a few minutes, the UK is much more protective of employees than the state of Georgia, and it is also, for some reason, much more protective of commercial agents than the state of Georgia. So that is something to be careful of. A commercial agent's relationship is very easy to get into. It's not quite so easy to get out of. So if that's what the main vehicles look like, the branch, the subsidiary, the joint venture, the agency or distributor, once you've picked your vehicle, how do you actually do business day to day? Well, what we're going to look at here is contracts, we're going to look at taxation, and we're going to look at company administration. Contracts. Here, the point on the slide really says it all. We have a common language and common law. We have the situation described by the late and great Yogi Berra as the same but different. Now, look, I'm going to say something as a lawyer. This breaks all rules of being a lawyer here. But if you have a contract written under the law of the state of Georgia and you want to do business in a similar way in the UK, you can take your Georgia contract, cross out the bit at the bottom that says governed by the law of the state of Georgia, insert law of England and Wales, and 80% of that contract will probably work for you in the UK. Now, of course, you can see I'm breaking all the lawyers' trade union rules by telling you that, because what I want you to do is pay me to write you new contracts. And if you want more than 80%, you probably do need somebody to do that. But I give this example by way of not seriously suggesting you do it, but to show you just how easy it is. Okay, you are on relatively familiar ground in buying and selling goods and services in the UK. We do have, as you might imagine, different consumer protection legislation. We have something called the Unfair Contract Terms Act, which prevents you from bamboozling consumers with the small print. But if you're dealing business to business, then that won't apply to you. You're in an environment, when it comes to doing deals, of minimum formalities and minimum regulation. That's not to say that there won't be regulation around the particular products and services that you're offering, but in terms of the basic structure of doing business, it's relatively simple. A handshake, an agreement over the phone, an exchange of emails, and you can have yourself a deal. So, if that's the basic legal landscape, what about tax? Well, if you set up a company, then that subsidiary will be paying corporation tax on worldwide profits that come through the subsidiary. Now, double taxation relief should be available between the US and the UK, but you're looking at taxing the company itself. If you're dealing with a branch, then you're paying corporation tax again, but on all the profits trading through that permanent establishment. Here's probably a good place to pick up on the concept of permanent establishment, actually, because once you have a permanent establishment in the UK, then you've got something which can be taxed. So the revenue authorities are quite keen on you having a permanent establishment, and you have to be a little bit careful when you send someone over as a pathfinder to stay for a few months. As we'll see, there are special immigration regulations which allow you to do this, that they don't find themselves effectively setting up a branch by accident and therefore generating tax on the sales that they might make while they're over here. So it is something to watch. But broadly speaking, if you have a branch, then you're going to be paying tax on all the profits generated through that branch. Now, again, you may well be able to get double taxation relief, and credits for losses generated by that branch may well flow through to you in Georgia, but that's something that you'd have to take local advice on. Some more taxation. We have a sales tax in the UK for any businesses trading over 85,000 sterling. There are three rates. Well, there's one rate, there's 20%, and then there's zero rated, and then there's exempt. We don't have time on this webinar to go into who has to pay what, but it's value-added tax is a weird sort of sales tax. It works on the principle that you pay the tax when you buy your supplies, and the consumers pay the tax when they buy the goods off you. And you get credit for what you have paid out to your suppliers, and you only have to account for the amount that you receive over the amount that you got in credit. It does mean that this is a very complex tax to operate, and you will almost certainly need help with doing that once you've got your sales off the ground and you're over the 85,000 threshold. There are special rules that apply if you're selling digital services throughout the European Union. So if you have come to set up a web-based platform in the UK, or if you're operating that web-based platform from outside the EU, you have decisions to take about whether you're going to apply local rates of VAT in each EU country that you're dealing in, or elect for one. And again, that's something that you'll need to take specific advice at the time. So there's the sales taxes. What about payroll taxes? Well, we have two. The British state has devolved responsibility for collecting taxes down to individual employers. So as soon as you employ somebody, then you have to deduct taxes from their payroll under the pay-as-you-earn system. We also have national insurance, which is effectively just another payroll tax, another income tax, but is in theory hypothecated to deal with social security issues. National insurance is our social security tax. There's also a levy there that employers pay per employee that they have. It looks oppressive until you realise, of course, that there are no health insurance costs for employers in the UK because we have socialised medicine. The only employer that buys their employees' health insurance is buying top-up cover, and it's something really you only do for senior executives. So more tax, less insurance is the trade-off. And finally, just to mention property taxes, we have stamp duty, we have stamp duty land tax. They're pretty specialist, they're pretty painful, and you were quite right to kick us out over them in 1776. We still have them, unfortunately. So, we've dealt with contracts and taxes. What about company administration? Well, as you would imagine, there are filings. When you register a company, you have to register it with the UK, the English authorities. It's called Companies House. You have to put in the address, the company's constitution, the shareholders. You have to put in any details of any charges, any mortgages that the company has, and clearly if you're involved in solvency proceedings. Note what I've put there in brackets. This part here, persons with significant control. This is new as of the last month. It's an anti-money laundering provision. It's designed to give transparency in UK companies. As we speak, there is a summit going on in the UK talking about corruption. This is one of the measures the UK has introduced to combat that. As well as shareholders, you have to put on a register if they're persons who in practice exercise significant control over the company. So it should no longer be possible for the owners of a UK company to hide behind a series of shells, regardless of whether those shells are in Grand Cayman or Delaware or anywhere else. There's similar filings that you have to do for a branch. You need the registration fee, you need the address and name of the branch, but then it's the parent company's address, directors, constitution, and latest auditor's accounts, which hopefully you should be able to pull just off the shelf. If those are the setup things that you have to go through, what about the financial reporting? Well, on an annual basis, you have to file annual accounts, an annual profit and loss, an annual balance sheet. Quite what you have to file depends on your size. There are different requirements for so-called small companies and medium-sized companies. But the formula for calculating whether you're a small or medium-sized company depends on turnover, capitalization, and the limits tend to change from year to year. So it's something that you would need to look at. But basically, after year-end close, within a few months of that, you have to file your profit and loss and your balance sheet for the year. So if that's what the company administration looks like, what about hiring your employees, getting your people in? If you're staying for longer than 6 months, you're going to need a permit. Now, again, immigration law will be the topic of a much longer webinar than an hour, let alone the 20 minutes. So just to pick up on a few points from this, there's a points-based system. We have 5 tiers. The factors that we're looking for in getting people in are their qualifications, experience, salary range, and age. But how most people get in is through an intra-company transfer and then on tier 2 skilled workers, which means that you need to set up your entity in the UK, your branch or your subsidiary, and then that branch or subsidiary needs to obtain a license from the UK Border Authority, and then you can bring your people in. However, there are, crucially, exemptions for short visits for people coming in and for a rep who's visiting to set up a UK subsidiary or branch. The people at UKTI are really helpful on pointing you in the right direction if that's the sort of thing that you want to do. You do need to be aware, though, that there are routine right-to-work checks going on in UK workplaces. It's on the employer to show that the person that they've employed has a right to work in the UK. Most UK employers put that in as a requirement of employing somebody, that they state that they have the right to work in the UK and they can provide evidence of it, passport, work permit, etc., etc. So that is something to be careful of. If you're hiring people locally, then it is different from the US, no question, but I hope relatively straightforward. Certainly compared to how it would be if you cross the 12 miles or so over the English Channel to France, where it gets a lot more complicated. But a lot of what I'm about to say is going to strike you as being pretty strange in any event. First thing to note is we have no employment at will in the UK. Everyone has a contract, okay? Every employee has a contract. And they also have a set of minimum rights that go with that contract, including rights to paid holidays, to paid sickness absence, to maternity leave, and other family-friendly rights. Now, one of the first things that US companies setting up in the UK do when they see this is they say, right, we're not going to employ anybody. We're going to have everyone working as independent contractors. We're going to have our head sales guy working as an independent contractor. We're going to have our local CEO working as an independent contractor. Guess what? They've already thought of that. There are no easy workarounds. We have exactly the same debates in the UK as you do in the US around whether somebody is an independent contractor or whether they're an employee, and we come out on pretty much the same side of the line. So it's very unlikely the guy who's heading up your UK operation is going to be really an independent contractor. Might be able to make it work, but it's pretty unlikely. A couple of other points worth noting here. Firstly, non-competes. If you're going to ship somebody in from Georgia to run your local operation, then you should think about whether it's worth having them sign up to non-competes. Because what you wouldn't want to do is hire somebody, they get to know your product, they get to know the market for your product, and then they go and leave and join a competitor for a lot more money, armed with all the intelligence and all the contacts that you've given them. Non-competes do work in the UK. They have to be strictly limited in scope and duration, but conceptually they do work. This is not like California. A lot of other labour laws may strike you as being just like California, but in this one, not so much. The final point I want you to note on this slide is that the minimum rights threshold applies to expats as well. So you bring someone in from Georgia to work in your UK operation, they get all this stuff. They get the contract, they get the minimum rights, and as we'll see in a moment, they get the protection against termination. And that may surprise you. You may think they're still operating on an at-will contract. Once they're in the UK, they're not. These laws apply to them. Of course, every employee you're going to hire in the UK is going to be fantastic. It's a brilliantly well-trained workforce. All employees are great. We never have any problems. But just in case, supposing you want to get rid of somebody, well, remember what I said. Everyone has a contract. There is a minimum notice period, or in practice, most employers will make a payment in lieu of notice. The minimum period is 1 week per year of service, up to 12 weeks. Most employees are on 1 to 3 months notice. Senior employees will be on 6 months or even 12 months notice, but that's very rare. That'll be for the top guys only. Everyone has discrimination rights from day one. The suite of discrimination rights we have look very similar to the ones that you have in the US. Just a couple of points worth noting. We have age discrimination goes both ways, young and old. There's no age threshold. There are positive obligations on employers to support employees with disabilities. Whistleblowers have enhanced protection, kind of like discrimination rights. And we also have religion and belief protection for employees. So we go further than quite a few US states. But other than that, the landscape will be broadly familiar to you. The good news being we don't have exemplary or punitive damages. What we have, which is very different from most states of the Union, is that we have protection against termination rules. Once an employee has been with you or with an affiliate for 2 years, and incidentally that qualification period is why you can ship someone in from the US who's been working for you in the US for several years, and immediately that service counts towards getting their UK statutory employment protection rights. So a local hire who you've picked up on day one won't have those rights, but somebody you ship in will, which is kind of counterintuitive, but that's how it works. What those employment protection rights are, we talk about unfair dismissal. Unfair dismissal, it's not unfair in the sense that you and I would understand it. It's dismissal against the statutory rules. They're very process heavy. Cutting a long story short, it can take between 2 weeks to 3 months to terminate an employee, depending on the reason for doing it. There's 2 or 3 meetings involved in the process, and how most employers work it is they weigh off the time against the risk and the money. The compensation for loss is capped at a year's salary, or roughly 80,000 sterling, whichever is the lower. And these things are normally negotiated out. So, a very brief guide to employees. Final slide. An essential management skill in the UK is how to make a cup of tea. All right, you will be tested on this by your employees when you arrive. Really, very simple. Use boiling water, take the mug to the kettle. Milk is the default option for everybody. If you don't have milk in tea, you're kind of a bit weird. For some reason in the UK, when we take the tea bag out, we tend to leave. We don't put it straight in the trash can. I don't know why. We just do. You can do that, and that'll really show that you're a local. However, if all this is too much for you and you really need a decent cup of coffee, there is a Starbucks on every corner. Okay, so that's the UK. I'd like to hand over to Naeem to talk about Quebec. And I'm hoping that I overran by about 4 minutes, which means that I managed to cut it down from 20 minutes yesterday. Naeem, over to you.
Thank you very much, Jonathan. Hello, everyone, and thank you very much for being here. My presentation is going to focus on Quebec. The idea here that I would like to keep in mind is that even if the process in some cases may be different, we can usually get you to the same results. So we will discuss some differences here, but you should always keep this in mind. And I think a little bit like the way that Jonathan presented the UK, you do have to keep certain things in mind, but they are not barriers to entry. And so the topics that I'm going to discuss, I'm going to go over very briefly our legal system, again, setting up a new business, some foreign investment and antitrust rules, a few things to think about when you are entering into contracts in Quebec, sales and product liability. So sales is the upside, product liability is the downside that you need to think about. Obviously marketing, branding, IP, distribution are also very important matters. I expect that a lot of you will have questions on language, so I'll be happy to address those. And I will finish with employment, which, like in the UK, although not in the same way as the UK, is a bit of a different animal in Quebec. So a little bit like the U.S., Canada has, federal laws and, our equivalent of state laws, which are provincial laws. And Quebec is the second largest province in Canada. We do things a little bit differently in Quebec in the sense that our system of law is a hybrid system. So it's not just a common law system as it is in most places in the U.S. and in the U.K., but we also have civil law. And why does that matter? Because contracts, in particular, are typically, they are governed by civil law. So what does this mean in real life? It means that we have, instead of, a lot of case law that we have to go through, the rules are pretty much set up in what I would call our rule book, which is the Civil Code of Quebec. And obviously there's other laws. But the key idea here to keep in mind is that the Civil Code will apply unless you decide otherwise by drafting your contract differently. There are certain rules that will apply no matter what you write in your contract, but they're very few and far between. So you should keep in mind not just what is in the contract, but what is not in the contract by knowing or asking about what may be applicable pursuant to the Civil Code. And in general, there's no issue with foreign corporations coming to the legal system in Quebec. I would tell you that it is, having dealt with, U.S. companies and U.S. lawyers, there are certain things to think about, but it is not a completely different system. I would even dare to venture to say that, in some aspects we are closer to the U.S. than we may be to France. Now, with respect to setting up a new business, Jonathan's presentation was great, and I think that a lot of what Jonathan mentioned is applicable also in Quebec. So, I will just touch on a few key points here with respect to Quebec. The first one is that, our corporation acts are draw from, what we hope is the best in the U.S. and the best in Europe, and also obviously with some Canadian touch in there. So they will be, in a lot of cases, similar. The general structure of, a board of shareholders and a board of directors and officers and articles and bylaws. So this is not something that is completely foreign. We also have partnerships. I know that in the U.S., some people prefer to use flow-through entities or tax transparent entities. Sometimes it's partnerships and sometimes it's LLCs. Here you would have to go through a partnership, but we have a similar type of vehicle. Now, there's always different ways of, coming to do business in a jurisdiction. You can come in, and set up a new corporation or new partnership, but you could also decide to, increase, shorten your time to market by purchasing a local existing business. And so M&A is something that we also often see. I would tell you that in a lot of cases, the same type of major questions that you would be asking yourself would also apply in Canada and in Quebec. However, there are some deal terms or market terms which are different, which are typically different in the U.S. versus Canada. So survival periods tend to be a little bit longer here, and I'm going into the jargon here, but if you have any questions on that, I'll be happy to answer them. At the end of the day, what you need to think about is, tax. It all starts with tax. When you're trying to choose how you're going to set up this new business or, through M&A or a new corporation or partnership, how much tax will you pay, and also what tax credits may be available to you, because tax is a liability, but sometimes it's an opportunity. And there are some very interesting tax credits available to technology companies in Quebec, depending on whether you are, a local company or you're a foreign company. We also have a concept of, income tax and sales tax and payroll taxes, but I don't want to go over that now. I'm happy to answer questions on that afterwards. And, at the end of the day, it's always a question of, who bears liability and who bears the risk. And when you're going to be dealing with, partners in the general sense, this is important to discuss, as Jonathan had mentioned. So, I'm going to mention, if you are coming into Canada, either to set up a new business or to acquire an existing business, one of the first things that you need to think about is, well, can you do so, or do you need to get an approval from the Canadian government first? And the answer is that usually you do not need, there's no need for an application for review if you are a foreign entity. It's usually a notification that happens that you can simply submit 30 days after, you've set up the business, or 30 days after you've acquired the company. And the Canada Open for Business concept was really, made clear in 2015 when the threshold for review was made much higher. So if you are a WTO investor, unless you're in very specific cases, if you're under $600 million in total enterprise value with respect to the new business or the acquisition of the existing business, you're fine. You don't need to get pre-approved. Now, we have antitrust legislation, our Competition Act, the same goal as yours, which is to encourage fair competition. The idea here is, I think you should keep in mind that just like antitrust, when you get to a certain level, is something that is, really a key concern for U.S. companies. It is also something that should be a key concern when you're in Canada and in Quebec. We have truth in advertising rules that you should keep in mind if you're doing marketing and other, other types of, branding, and the other typical matters that you would deal with. If intellectual property, if you're an inventor, and intellectual property is one of the ways in which you want to, let's say, carve out your niche, right? You want to have that monopoly. You need to be careful about the new updated guidelines, I should say, that were released in March of this year by the Competition Bureau. So again, if this is something that is of concern, I'm happy to give more information on that later. So we've talked about a couple of the main acts that you need to think about when you're coming in, no matter how you're coming in. But obviously, the main issue here is, well, how do I enter into a contract, and what do I need to worry about when I'm entering into the contract? So freedom of contract applies in Quebec as it does in the U.S. and in the UK. So this is something that should make you feel very comfortable. If you have a clearly drafted agreement, it gets you most of the way there. Good faith is an important concept in Quebec and in Canada, just like it is in the U.S. So even if you have the right to do something, because it's expressly written in your contract, you still need to do it in good faith. This is not something that should worry you. It's actually the way that I hope most people like to do business. Limitation of liability in Quebec is one of the, I would say, major differences when you are looking at contracts. So in U.S. contracts, oftentimes you'll have the very verbose limitation of liability language in all caps that talks about a whole lot of types of damages. The civil code here helps because we do not have to go into all these details because there are some limitations of liabilities that are already set out in the civil code of Quebec. However, that's good if you're the supplier. If you're the client, you have to be careful about what is in there and what is not in there. With respect to and this I would say is just an example of being careful about contracts in general. So obviously you have to be careful about what is in the contract, but what you need to be most careful about when you are in a different jurisdiction like Quebec or others is really, well, what is not written in this contract that still applies, because as I mentioned before, the Civil Code acts as a supplement. So this is just, I think it's not to scare you away at all, but it's just to keep in mind to ask those questions too when you are taking a look at the contract. Predetermined contracts, which are take it or leave it contracts, are contracts that, if, for example, you have license terms that you want to impose upon consumers in Quebec or things like that, and you have to be careful about whether the clause is in there, so the language, if it is abusive, it's going to be taken a very close look at by the courts. So you have to, again, good faith is important in here. The famous question of language in contracts. So no, you do not need to have all of your contracts in French if you're dealing with a Quebec entity. The only time where you need to have a contract in French, apart of course if you wish to have a contract in French because you like French, is in the case of a predetermined contract. So not a contract that's being freely negotiated with somebody else. It's a contract that you are imposing upon somebody else, right? And in this case, it has to be in French unless you speak with the person with whom you're going to enter into the contract and the person says, listen, I'd like the contract to be in English instead. And so, this This should help you because in a lot of cases when you're going to be entering into the jurisdiction, it's very rare that you're going to be imposing your terms, right? You're going to be dealing maybe with distributors or with, larger clients, and you're going to be negotiating those agreements. But as you're coming into Quebec and dealing with, consumer issues or maybe you have more power and you're, negotiating power, then you do need to think about this. Service contracts. One thing to remember about what is not in the contract is that a client in Quebec under the Civil Code has the right to unilaterally, so by itself, cancel a service contract. And so if you are a supplier and you're coming into Quebec and you gave a great deal to a client, but you only want that great deal you only want to give that great deal to the client because you're going to have a 5-year agreement with that client, then you have to be careful about, making sure that something is clear in there about, in your contract. Because if you don't have it, you're in trouble. Sale of goods and product liability. So as you would expect, there are implicit warranties that exist under the Civil Code. That you own what you sell and that the goods that are being sold are of a certain level of quality. Information is important, I would tell you. If there are known defects, you should tell the buyer about it because this will limit your liability down the line. Product liability in Quebec is something that is important, and I would tell you very importantly, because oftentimes people think about product liability as a direct contractual relationship. If I'm selling something directly to a consumer, then that consumer can sue me. But what if I'm just selling through a distributor or otherwise? Is that the way to limit my product liability? And the answer to that is that not really. If you look at the excerpt that I put of the Civil Code, and I promise this is the only legal excerpt in this presentation, if you're a manufacturer, if you're a distributor, if you're a supplier, if you're a wholesaler, an importer, you still have to warrant the buyer in the same way as the seller. What does this mean? This means that a consumer or the end user can sue you even if there's no contractual relationship. And so, this is not something that you would worry about a lot, of course, if you stand behind your product, but you do want to take a close look at your contractual protections with that distributor to make sure that distributor does everything that they need to do. And you also need to think about operational protections and insurance to make sure to lower your risk there. With respect to distribution contracts, the only thing that I would mention is that you should be careful, again, about good faith. So if you entered into a distribution contract with a distributor, that has a 30-day express right for you to terminate the contract, right? And I'm talking about a situation which is, not for cause. It's at your discretion. And you've been dealing with this distributor for 20 years. Even though it's written specifically like this in the contract, it may not necessarily give you the right to do this. You're going to have to use good faith in order to make sure that the notice remains reasonable. This doesn't mean that you can't get out of contracts with distributors. You certainly can, but you just need to evaluate how things are, and we can help you with that, and to determine what would be reasonable notice. What now is, I think, one of the things that people forget about the most. They think about contracts, they think about corporations, etc. But oftentimes when they think about branding, especially in the tech world, which is global, people sometimes forget that you can have the best protection with respect to intellectual property in the U.S. That money can buy. But that will not help you at all when you go to a different jurisdiction. You need to make sure that you're protected in that separate jurisdiction too. And so, you just make sure that, I guess, before spending a lot of money, before dealing with a lot of the operational issues, that the reason why you're coming, if the reason why you're coming to Quebec is because, you have a patent in the U.S. and you want to make sure that you have you have that same monopoly or protection in Canada, that's your business case. Well, make sure that you obtain that protection in Canada also. Same thing for trademarks. If your name is very important in the U.S. and you haven't protected it in Canada, it's good to do a first check to verify if somebody else may have that same name in the same category of wares and services. Tech now and advertising are very much interrelated. So I think that you should keep in mind that regulations are somewhat different here. The biggest one that I want to draw to your attention is our anti-spam legislation, where even if you're a U.S. company and you're just doing, I would call it business development by email or through other electronic messages in Canada, you can't do that unless you have the consent of the party from whom to whom you're sending the message. There are some exemptions, but this is important because this is a requirement that you have maybe when you're at the initial stages, when you're not even sure whether you're going to come into Canada or Quebec, and you want to make sure that you're on side with respect to this. I can tell you that people have been surprised by the high penalties levied with respect to this anti-spam legislation. It's easy to deal with, but you have to deal with it. Privacy law is also something I think that is very important, and oftentimes it's consumers think that privacy is important, and technology companies want to have the right to use personal information in order to make some profits. We have I know that it's a very interesting set of rules that you have in terms of data breach and data notification, some health-specific legislation that you have in the U.S. We also have, an interesting set of rules in Canada. I would tell you that in some levels we are, I think, at a higher threshold than you are, maybe between you and, the highest threshold, which is in Europe. But with respect to data breach and data notification, it's not as advanced. We're currently under consultation in order to, upgrade our federal act here. And so you need to make sure that you think about it from a compliance issue and what may be similar or different. So HIPAA is not the same in Canada, for example. But you also need to think about how do I need to protect myself under contract to make sure, for example, that, if that information was with a distributor and that distributor was breached, that he has an obligation to let me know about this so that I can deal with reputational issues and try to, manage the problems with this. Going now to language, the idea here that I think my most important message about language is that a lot of people think about language as a compliance issue, and I would like you to think about it as a marketing issue. Forget the laws. We have a charter of the French language in Quebec, etc. But if you're going to come to do business in Quebec, well, you're going to want to reach the most consumers and clients as possible. And French speakers do represent the largest customer base in Quebec. It's more than 3/4, of people in Quebec. And so in that situation, it's a good idea if you want to have maximum reach in order, to comply with some of the French language requirements that we have. So there are some small things like, if you're going to be doing business in French, you need a French version of your name, but that's just for local registration in Quebec. You need to think about product labeling, advertising, sales literature that needs to be in French, not just in English. If your website is specifically directed at Quebec residents, you need to think about that too. There's exceptions in a lot of these, but these are just thoughts to have, kind of flags to think about. Business and employee forms, is a similar situation, and signage. Signage, just to let you know, there are currently draft regulations that were, I guess, made public on May 4th with respect to outdoor signage in Quebec. And so if, that signage is important to you, it's something that you need to think about. And the idea there is that, people want, I guess the Quebec government would like signage to be in French. It could be in other languages too, but there's a, question of, which is the most important. And if you have a trademark, do you need to add, a French descriptive, or you're okay because of the trademark that you have? Employment. Similar situations, I would say, than some of the points that Jonathan mentioned. We do not have at-will employment here. You do have to provide reasonable termination notice or indemnity. The same situation that, there's a contract, even if there's nothing written, you do have a contract. Labor standards are important. After 2 years, you do need good and sufficient cause in order to terminate employment. Non-competition has to be reasonable and was the subject matter of a recent Supreme Court decision here. So the idea with non-competition, and I'm going to use jargon here, sometimes in the U.S., depending on the jurisdiction and what you're doing, people rely on what's called the blue penciling way of doing things, which is basically I'm going to draft a clause to be very much in my favor, and then if it comes before a judge, well, the judge will just lower it to what is the most acceptable standard. In Quebec, you do not have blue penciling, which means that if you're a bit too aggressive on your non-competition clause, and it's the same with other types of clauses, the judge will simply strike it out. So you thought 2 years was reasonable, you put 3 years, and now you have 0 years as non-competition. So you do need to be careful about this. And in the context, again, of a sale of a business or a purchase of a business, there's what we call the successor employee rule. And this one is one that surprises a lot of people in the U.S. The basic idea about this is as follows. If you're buying all or substantially all of a business, the employees follow automatically on the same terms and conditions with, accumulated years of service. So it's not a question of pick and choose. It's a question that everyone comes along. What if you don't want all of these people? Well, you need to discuss this and be very clear in your, purchase, share purchase agreement or asset purchase agreement, with respect to who's going to deal with the liability and, what is the real risk regarding that. And I would simply like, if I can, to emphasize that with respect to employment, a lot of the, I guess, rules of thumbs that you may have in the U.S. will not apply necessarily in Quebec. So it's good to kind of clear your mind completely of what is usually okay and what is usually not okay, and just ask the question, because this is where we sometimes see that, U.S. companies may make mistakes because they realize something a bit too late in the process, and it's better to think about the right strategy from the start there. And just to be clear, you can terminate employees. It's just a question of price. Okay. So the idea here is I'm not telling you that we're not in the same situation as other countries. And so in order to wrap this up with respect to Quebec, I would tell you that, again, the process may sometimes be different, but we can usually get to the same result. There's in my experience, I've heard a lot of U.S. companies mention how the tax credits and the quality of the workforce, including with respect to R&D innovation, are really great reasons to come to Quebec and to stay in Quebec. So they don't just purchase a company, but it stays there. And the other thing too is I would tell you that the Quebec government is really focused on, from a strategic standpoint, making sure that people who come to Quebec do so without too much red tape that they have the proper programs in place in order to help them. You're not sure how to do things, from a French language standpoint. There's a lot of ways that the government can help you in order to get up to speed, and it will give you the time to get up to speed also. And, innovation, tech-driven manufacturing, and frankly, the Quebec government being a client of yours eventually also with respect to new IT-specific public procurement rules that just came into effect. So with this, I would like to thank you and apologize for running a little bit over our allotted time, both for John